Which is the best FANG stock to buy now? That is Facebook versus Apple versus Amazon versus Netflix versus Google. I'm going to evaluate those 5 stocks across 4 different metrics in this video and conclude with just one, the best one of the FANG stocks to buy. So let's get right into it. The first metric I'm going to compare these FANG stocks on is revenue. Now, looking at revenue, you could see Amazon has just exploded in terms of revenue, reaching 513.98 billion in its most recent year. That is incredible. That is, I believe, the second highest annual revenue in the world. I believe Walmart is number one according to this metric. Apple coming in at 394 billion. That is also extremely impressive considering that Apple, is selling hardware and services. It's got way fewer SKUs and products than Amazon does. Amazon sells millions and millions of items and products, including services. Whereas Apple, not that many. I mean, if you look at the App Store and you say, oh, well, it's got thousands of items in the App Store. Well, yeah, you can say that, but still, it's impressive that Apple generates so much revenue on such few products, and you can attribute that to the power of the iPhone. The iPhone is a relatively expensive product that Apple sells multiple millions of every year. And then you have Alphabet at 282 billion, the advertising industry giant, and then coming following that, Meta Platforms or Facebook, 116 billion, and the tiny baby in this group, Netflix, at revenue of just 31.6 billion in its most recent year. The next metric I wanted to look at is cash flow from operations to sales. So not only do I want to see how many sales the company is making, I want to see how good they are at turning those sales into cash flow, right? I want to see sales turn into cash flow. Otherwise, sales are less important if you're not turning them into cash flow. And according to that metric, Meta Platforms is the best at 43.29%, significantly ahead of everyone else. The next one is Alphabet at 32%. Then it's Apple at 28%. And then you have Amazon at 9%. And then in last place, you have Netflix at just 6.41%, as the company is spending billions and billions of dollars on content creation. The next metric I wanted to look at is operating profit margin over the trailing 12 months. And again, in this metric, Meta Platforms was or has been the best over the last decade. It has recently lost that title as the company has faced headwinds. Partly one of the other FANG companies are to blame in that Apple made the changes to its privacy policy that makes it more difficult for Meta to sell targeted advertising, and that's brought down its revenue growth, that's brought down its profitability, and that brought down the lead it had over the other companies and gave it to Apple. Apple now has the best operating profit margin in the trailing 12 months among the FANG stocks. And then it's Alphabet at 26.4%. And Meta is still not too shabby in third place at 24.8%. Netflix at 17.8%, not too far behind. And way, way behind everyone else is Amazon at just 2.38% operating profit margin. And Amazon is notorious for operating at very, very low margins. In fact, in the entirety of the last decade, it's never had an operating profit margin over 7%. Never. So it's a business that relies on high turnover and really, really high levels of revenue and sales in order to make its total operating income, and it doesn't rely on fat profit margins. So finally, I wanted to look at these companies' valuations, looking at the forward price to earnings ratio, looking at 1 year. And according to this, the most expensive stock is Amazon at a forward PE of 37.5. And then you have Apple at 23.2, Netflix at 21.2, 16.05, Meta Platforms at 17.07, and Alphabet is the cheapest at 15.68 a forward PE. And so if I was picking which one of these, in fact, I am picking which one of these FAANG stocks is the best one to buy right now. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. I would say Alphabet is the best one to buy right now. It's the cheapest of these five according to the forward price to earnings ratio. It's got very good operating profit margins, very good cash flow from operations to sales, and the company recently made job cuts and cost cuts that should help profits and cash flow going forward. It should be a more efficient company going forward. So for that reason, for those reasons, Alphabet is my top choice among these FAANG stocks to buy now. Alright, so that's all I've got for this video. I hope you've enjoyed it. I'm going to add a few more videos that I did to the end of this one. So please click on one of those and I'll see you over there. Thank you for watching.